Hello everyone, welcome to a new video. Today I will be analyzing the company of Adidas, the sports and apparel company that most surely you already know about, which is down 56% in the last year and 65% since its all-time highs. The question is it a good buy at the moment? Before I answer this, let me quickly give you a short overview of the main topics that I will be covering in today's video. So first of all, I will start with a general introduction to the business, and we will also look at some key metrics. Then we will go into the industry and competitors, followed as always by the financials, and we will compare the financials of Adidas with those of two other competitors, which in this case it will be Nike and Under Armour. Afterwards, we will go into the current stock price and valuation, and finally, as always, I will be giving my personal opinion on the company and also my future plans with it. With that said though, and after I remind you that if you enjoyed the video, it would be greatly appreciated if you could just give it a like. Let's not waste any more time and let's dive right into the video. Adidas needs no introduction, and as you probably already know, it is a footwear and apparel sports company that has its headquarters in Germany. In terms of products, 53% of its sales are from footwear, 41% from apparel, and 6% from accessories and gear. They are a truly global company with sales all over the world. As you see in the graph, 37% of the sales are from EMEA, 24% coming from North America, 22% from China, 10% from Asia Pacific, and 7% from Latin America. In terms of performance across regions, the ones that grew last year the strongest were Latin America and Europe, followed by North America. The worst performing regions were Asia Pacific and China, which are still down from 2019 levels. And now that we are talking about sales by region, the Russia-Ukraine conflict has also negatively affected the business. About 500 million euros of sales were coming from Russia back in 2021, and which represented about 2.38% of the revenues. And since the war or the conflict started, Adidas decided to pause their operations in Russia, which means that this year, 2022, basically, they won't be making these 500 million euros that they were making last year, so it will most certainly impact their top line. Moving to the distribution methods, about 38% of total sales were from direct-to-consumer, and the majority, so 62%, were from wholesale. As you already know, direct-to-consumer sales usually lead to higher gross margins, which are better for the profitability of the company. As important points to highlight from the business, I must mention that Adidas just recently sold one of their brands, which was Reebok, and that was a pretty bad deal for them, and actually they sold it because it didn't perform as expected. They had bought it back in 2006 for $3.8 billion, and they just sold it now recently for $2.5 billion. So just in the purchase and sale of it, it already lost money. And additionally, the CEO of Adidas also recently resigned, and currently Adidas is in the process of looking for a substitute, but it's still not being defined. Going now into the apparel industry, this is expected to grow at a CAGR of 5.48% until 2026, and if we look at footwear, it is expected to grow at 5.88% CAGR until 2027. So we have very nice tailwinds behind. In terms of competitors, there are many out there, but we could highlight as the strongest ones being Nike, with other players of course like Under Armour, Lululemon, Puma, Deckers Outdoors, amongst many others. However, for the continuation of the video and the comparison of the financials and so on, as I mentioned at the beginning, I selected Nike and Under Armour. But before going into that, let's look first at the financials from Adidas. First on revenues, the company has been pretty stagnant over the past few years and is still below 2019 levels. Also, this year, according to the outlook provided by the company in the latest earnings call, they expect revenues to remain flat or in the best case scenario to grow high single digits. Personally, I don't think that they will do good this year, and seeing the inflation rates and how the economy is going, so that's why in the guidance I have placed a -1% on revenue growth versus 2021. And then looking at the bottom line, they are a profitable company with profits of around 2 billion euros per year, excluding the year 2020, which had a more negative COVID impact. On cash flows, the company has positive free cash flows of between 1 to 2 billion euros annually, and from this the company pays a dividend of around $3.3 per share annually, which costs the company around 620 million euros annually, so to pay all of this dividend. And this means that the payout ratio is between 31 to 60% from the free cash flow, which means that the dividend is relatively safe. Additionally, Adidas does share repurchases and has a program in place to purchase up to 4 billion euros worth of shares until 2025, so the company is certainly committed to returning money to shareholders, and I really like this. Also, at this point, I think that it's worth talking about something, because yes, it's true the company has been doing relatively well over the past few years, but the question many people have, and one of the reasons actually the shares have dropped so much in price, is because people are asking themselves, okay, how is the company going to do if we do enter into a recession? Luckily for us, Adidas was already publicly traded back in 2008-2009, so the last financial crisis that we had, so we can see how the company performed back then, and it is true that past performance doesn't determine how the company will do that in the future if we enter a recession, but at least we have some precedent that we can look at. So, if we look at that, we see that the revenues stayed pretty flat, so sales didn't really suffer much or declined slightly. And then on the bottom line, it is where we can see the largest effect, with the net income margins dropping significantly during 2009, but recovering pretty quickly than in 2010 and beyond. So in summary, we see that the company has already survived recessions and has managed them pretty well, staying profitable at all times. On this end though, let's look at the balance sheet to see if the company is well capitalized. As of June 30th this year, the company had 1.5 billion euros in cash in the balance sheet and a debt ratio of 69%, which is pretty conservative. In total, all current assets were worth more than the current liabilities, which is also good. And overall, it is not the best balance sheet in the world, but it is well capitalized and doesn't have too much debt, so if things were to get bad, they could just go to the banks, ask for more debt without compromising too much the health of the balance sheet. If we compare now the financials of Adidas with those of Nike and Under Armour, we see that in terms of revenues, Adidas is about half the size of Nike and 4 times larger than Under Armour. On profitability, the one with higher net income margins is Nike also, followed by Adidas and Under Armour, and the 3 companies are profitable, although Under Armour has been quite irregular. Also, on free cash flow, all of them are profitable, and Nike is again the best, followed by Adidas and then Under Armour. Now it's time to look at the valuation. Adidas currently trades at 113 euros per share and has a market cap of around 20 to 21 billion euros. Based on the net incomes of last year, 2021, it trades at a PE of 9.82 times. And based on the profits of this year, which I made a very conservative estimation assuming that they will report less than half of what they did this year, it trades at a forward PE of 16 times. On free cash flow, it trades at 8.23 times 2021 free cash flow and 19 times that of the next year. Again, with a very conservative estimation for next year, assuming that they will do worse than the past one. The question is, what was it trading at the past? Because we are seeing these metrics of valuation, but we don't know what has been the historical performance. Based on the average of the past years, the PE ratio has been around 20 to 25 times, so the company currently trading at 10 times or 16 times forward PE definitely looks cheap. Let's check now the valuation of Nike and Under Armour. Nike is trading at a PE of 23 and Under Armour at a PE of 9 based on last year's numbers. Nike has always been trading at more of a premium because it is also the highest quality business from the 3 of them. And it also makes sense that it trades more expensive. Still though, based on historical valuation metrics, Nike is also looking pretty cheap at the moment, although in my opinion from the 3, the one that is looking more attractive is Adidas, because it trades at a PE of 9, and yes, it's true it's not as high quality company as Nike, but it's still better than Under Armour. And also something that I didn't mention so far is that Nike and Under Armour are trading in the US, while Adidas is trading in Europe, and European stocks have been hit the hardest recently, basically because of the Russia-Ukraine conflict. Personally, as a European investor, I also prefer Adidas because it is trading in euros and that is also my local currency. Also, with the dollar so strong, I am not a big fan of now converting euros to dollars to purchase shares in the US because yes, the shares or the companies that I invest in might do well in the future, but I might end up losing money from the currency conversion because personally I don't believe, or I hope, that the dollar doesn't stay this strong against the euro. I mean, if you look at the charts, the dollar hasn't been this strong in more than 20 years. Also, with the euro so weak, Adidas should actually benefit because, as we saw, it has sales from all over the world and lots of sales in North America. So it should also benefit from the currency conversion because now with the same amount of dollars, they are basically getting more euros. In my case, I currently own shares of Adidas, have been buying actually quite a bit of shares recently as the stock kept dropping and dropping, and if it keeps dropping even more, I will likely just add more to my portfolio. I am completely aware that the shares could still go lower, especially if we do enter into a more severe recession in the next months, but I am pretty confident that the company will do well long term, and especially seeing how it has performed historically and how it has already been able to sustain recessions in the past. Anyways, please remember that everything I share in this video is just based on my opinion, my research and my calculations, which of course could be wrong. I take absolutely no responsibility, and you should always do your own due diligence whenever investing in this or any stock, as I am no financial advisor. With that said, what are your thoughts on Adidas? Do you own any shares of it? Do you think that it is a good investment at its current prices? Please let me know in the comments below. If you enjoyed the video, then don't forget to give it a like, subscribe to the channel if you're not yet subscribed, and as always, see you next time.